weekend. Ira Epstein with your financial market wrap-up for the weekend of February 14th, Valentine's Day 2020, just after 4:30 p.m. Central Time. So we know what we're dealing with over this three-day period. Now, while it's President's Day Monday and the stock market will be closed, that's not the same in the futures. The futures markets will open on Sunday night in most of the electronic markets, not the grain markets as I understand. It might be. You got to check. Maybe the grains too. I didn't look at the calendar. I know the ICE generally doesn't open their softs and so on for the holiday. So check that. I sent it out to everyone. Monday, the markets will close by noon, reopen at 5 p.m. It's the holiday schedule. But we're going to see the impact in the financial markets because the gold's going to be open, the stock market will be open. So you want to pay attention to what's going on there. We're going to get the news, more news on the coronavirus, as they call it, COVID-19 now. And that will be a market event. Whether it's up, down, sideways, we're looking to see, does China get a handle on this, and obviously we don't want to see a lot of cases spreading. I just watched, could not have been 2 minutes ago, as to how in the U.S., how many cases of the flu we have. It dwarfs what China's going through. How many people have died in America from our flu this season? Unbelievable in size. So we're used to these. Apparently China doesn't get those diseases. So it's a bit different and something to be thought about. But we get the flu, and I've had 2 bouts of it this year. Hasn't been that much fun. So let's take a look at these charts. For the monthly area chart of closes, and we're not through with the month, but we're already up halfway through at 156 points in this market to a new all-time high monthly close, intermonth, I guess you can say it, or intra, 33.80.90. Pretty strong. When you go to the weekly charts, and that's what we do, we look at one monthly chart on the weekend edition, and the rest are going to be weekly on a closing basis, a new high closing of 33.80.90. Powerful. When we look at just a weekly bar chart, you can see the pattern here. When I put the swing line, we still are very much in this pattern of higher lows, higher highs. So until the market takes out 32.12.75, this pattern's alive and doing just fine. The 18-week moving average of closes at 31.87.5, let's call it. And it's been moving at the tune of approximately 20 to 23 points a week recently. So that's going to put this market up very close to this low here of 32.12.75 when the market reopens come Sunday night. It's just a rule of thumb, but it's a way to look at it because the slope has been pretty consistent in the market. When we look at Bollinger Bands, each time the market has run to these bands, it's given the market a pullback, and I think the pros have been stepping in there, obviously, because you haven't gotten that pattern of a lower low. Not yet. So, resistance, if you continue up, 34.02. Now, at some point, you'll get that correction where the market will break the pattern. I wish I could tell you when, and that's what we look here for. And I'm not seeing it. It doesn't mean it can't just happen with something on this disease, but the momentum is still locked in. The bias is up. The trend is up. If you take out that 32.12, and from here that's 160 points or so, that'd be your warning. In the NASDAQ, higher lows, higher highs. You hit the band, you back away, hit it. It's been the hardest markets for people that are trying to go the other way. And you do realize that everyone that is short in a futures market on a weekly basis is with a loss. The market finished today, the high of the day was 96.50, or the week is 96.59. You finished at 96.32. So I guess I'm wrong because there are some people in that 20-point range or 30-point range that might have something of a profit, but anyone that's been holding on doesn't. That keeps fueling the market too. In the Dow, the corrective mode, this is where you started that. And if you'll notice, you made a lower low. You've come back in the market. You took it back now. Where? Well, the market is trying to establish, again, higher lows, higher highs, and the momentum is built back into the upside. You'd have to get back under that low right through here to hurt this market, which is 28,105. That would be the warning sign to me that, uh-oh, something changed in this game. In the Russell, you have a pattern of a lower low and a higher high. This market is not trending. Yes, it has upside bias. We see that where the market has held the 18-week average. It broke out of this sideways action that it had. But unlike the other markets, it seems to always be lagging something. The momentum is flat right here. The bias is up, and you don't have the higher low, higher high pattern. In the VIX, you fell back into, starting last week, as you can see, the 100-week average of support. You had been over the Bollinger Band, fell back, so the next level of support, in theory, is going to be the 18-week. It went to it. Now, in order to give this market and break it down further, you've got to really take out this 1175 level. Why? Because the pattern is still one of higher lows and higher highs. All you've done is fallen into the major support zone. Momentum hasn't turned down. It stopped pointing up, but it's sort of flattened out. In the 10-year notes, you've been in a pattern of higher lows, higher highs, into this big resistance area formed by the Bollinger Band. Now, the theories of the Bollinger Band, the theory, there's many that go along with it, is that the market will trade within the bands 95% of the time. So what I teach is that the first time to the downside or the upside that you hit it, don't be surprised that you try to turn away from it. And that's what's been going on. Is the market going to try to break out from here is what people will be asking. And the question, of course, we know all week long, we heard talk on TV, will the Fed have the markets back if this coronavirus gets worse? And I think the answer is yes. What I'm not quite understanding is why in America we're panicking about the coronavirus when our own flu has got so much bigger numbers than that. But it's world markets you got to be careful of. We're not in an island, remember that. Dollar index. Well, we're back up at that extreme again. Now, each time you get up to these upper Bollinger Bands, I realize that that's where the market's the most bullish or down to them the most bearish. I'm concerned that you're back up to an area that the market's got a problem with. And I wouldn't be surprised if going home some of the pros are taking money off the table. There's nothing bearish on the chart, but it gets up to this Bollinger Band and it's fighting right there. It closed over it. The number is 98.87. It stays under it most of the time. So I'm looking for this market to either consolidate or attempt to give something of a pullback. And no, I am not in the bear camp, but I'm also not as bullish as I was earlier on this market. I think it spent a lot of its energy. In the eurocurrency, is this going to be a breakout from this action or a fake out? That's going to be the big question. We're again under the Bollinger Band. Will you stay under it and break out to the downside, or is this market going to find a reason to flip back into it? So the dollar and the euro are mirror images, flip-flops of each other. It's going to be an interesting week. In the Canadian dollar, we keep reaching down here, and will we be able to get to this 74.86 area? Canada's had a mess on its hands. The rail system, tribes blocking the railway. They're talking of closing down some areas. It's been a pretty rough time for them. And they have to decide what to do with their oil, their natural resource. Are they going to build the pipelines or not? But the trend, you can't argue, it's been down. The next target, if it can hit, it's the lower Bollinger Band, and resistance is back up at the 100-day and the 18-day average of closes. In the Japanese yen, you have hit your objective. Again, I'm going to repeat. The first challenge of the Bollinger Band, as far as I'm concerned, is where I look for the support. You just missed it here. You hit it this week. And now you turn the market and you flip-flopped back to the 100-day. Resistance back up through here. Momentum still down. Trend down. Bias down in this market. Bitcoin still on a tear to the upside as everybody's watching for the May date when the halving takes place. But this market's been one of the better gainers of the year. In December, you were around $6,400. You've added in value. It's probably, if you're asked which market's up the most, if you call it a commodity market, it's probably Bitcoin up another $650 this week, another 6% gain for the week. In the crude oil market, you've got, if you look at a weekly area chart of closes, the differential between Brent and WTI. You peaked out up here in that $6.50 range, but you may have bottomed out against this $4 range right now. 570 looks to me like a number that the market might target. We'll see. What else about Brent? Well, if we come here, you went from your Bollinger Band top, and you know what? I'm a broken record. The first challenge of a lower Bollinger Band is where I think pros take money off the table. You hit it last week, now you're getting your bounce in the market. Not a trend change, but you're getting your bounce. Now the question is, resistance is substantially above this market, $5 higher. In the WTI crude, let's do the same. Here's the market. You know, you're knocking on the door last week. The low was 50.97, the Bollinger Band 51.13. That's where I think the pros took some money off the table. And admittedly, it spun a little bit past it. Now it's right back in line with it. It's ideas of zones. I mean, there's a point where you take some money off the table. Now, does this mean the trend has changed? No. The trend is still down, momentum's down, bias down, but the market's trying to give a bounce away from that Bollinger Band. Rebob gasoline, you don't have a trend. You have, on the weekly chart, a higher high and a lower low. I frankly didn't think you were going to break through this low again. I was wrong on that. Now you've gotten it. So it proved me wrong a little bit, and now the market's come back. Look for resistance at 163.40. This is that seasonal time where gasoline often tries to get its legs back from under it. So we'll see where this all carries you. Now, how I start you off every morning, and you know, I know you hear this, but it's so important. 5:30 in the morning or so, 6 o'clock at the latest, I am recording a video with 40 charts in it. I'm not in that video. I'm obviously still at home. I don't live far from the Board of Trade, believe me. I'm right downtown Chicago. And I'm giving you what I think is going on. I've had a chance to read from Chinese newspapers, most of Asia. I've looked at Europe, and I'm putting together ideas for you to get you with what's going on and what the markets have looked at in the nighttime. So then I tie with that my technical analysis, and believe me, I'm not bashful. I'm going to tell you buy here, sell there, do this, or I'm going to say, you know, this is a good time to keep your hands in your pocket. There's too much that you can't control because of what's going on with the virus. Other hand, I think that that's peaked, and I've said that here many times. I think the market's worked its way mentally through it. It's going to need a shocker of some time to change that thinking in the marketplace. We'll see if I'm right or wrong. And obviously, this 3-day weekend that we have right now is real important because we have President's Day. We're not going to be here. Most of us, the options pits are closed. But Tuesday, it's going to be rock and roll day. But remember, you are open on Sunday night and Monday morning in many of the electronic futures markets. When I do my video, I do them in this sequence, and ideally where I want you to watch the subscriber video is through the website, ideally, only because the sequence that I do it in is always the same. If you didn't want to watch the meat markets, you can skip it, and it's going to light up and show you on the names what's right there as you're moving your cursor. You can watch the whole video. They're about 20 minutes long, so they really get a lot done. Also, I put that video, it's in our QT platform so that you can watch it right there, but it won't be able to do all the tricks that we can do on our website to take you from one to the other. You learn the sequence, you're able to move around it pretty fast. I do, and it's simple. How do you get this? Go to our website under the word research. I do charge for it. It's less than a tick in the S&P, less than a tick in the NASDAQ. Just think about it, $7.95 for the first 30 days. You don't have to stay with it. Most people that have tried it, we find that they like it, and I'm throwing in the Spider ETF video right now. So you're getting 2 for the price of 1 until I decide to start charging for the Spider ETF video. Pretty good deal. Take a look at it. Go to our website. You have a great weekend. I will see you all again in these videos come Tuesday. Take care.